Hi, and welcome to the March 2019 Downtown Pittsburgh IBD Meetup video. My name is Eric Rossi. I'm the co-organizer of this group. And for your reference, there's a link here to the Meetup group's webpage. So the mission of this group is to educate individual investors about the CAN-SLIM investing strategy. And this presentation is for educational purposes only. It should not be taken as recommendations to buy or sell any stocks. Investing in stocks carries risk and you can lose your money. And I'm a non-professional volunteer investor. And there's some trademark information in terms of IBD, CAN-SLIM, MarketSmith, and Meetup. So this video assumes that the viewer is familiar with the CAN-SLIM investing strategy developed by Investors Business Daily. And at a minimum, viewers should read this book by William J. O'Neill before viewing this video. If you haven't, you can still learn something from it, but it'll be a lot easier to follow if you've read this. And I recommend reading this book actually many times as you continue to trade and become better. Topics for this month are year-end review. Even though we're a bit a ways past the end of 2018, I haven't posted a video for a while. My apologies for that. I've been dabbling in some real estate, so been focused there for the past 6 months. But we'll talk about how to evaluate your results from last year and some questions to ask yourself at the end of each year. I'll go through some stocks I'm currently holding, some recent trades as examples, and then we'll conclude. Okay, so in order to get better as a trader, it's helpful to take a look at your results at the end of each year. And you could do this more frequently. You could do this every month or every quarter and every year. But these here are just some questions to consider asking yourself and looking back on 2018 if you were trading actively and you want to learn and find ways to get better in 2019. So some questions to ask yourself are, what did you do well this year? What did you not do well? And losing trades often can teach you more than winning trades. So the second question is the more important one. What could you have done to get better results? So were there trades that were up a good amount of money, you had a decent profit, and maybe that profit went away and you lost it? Or did you take bigger losses on stocks where you could have potentially broken even? There's just some things to think about. Which of my sell rules are working and which ones are not and need to be revised? And I'll talk about an example here on the next slide. Did I buy at the right time or the wrong time? So buying stocks were working pretty well in the first and second quarter of 2018. And then in the third quarter, breakouts weren't working very well. A lot of breakouts were failing, and same thing continued into Q4, which ended up being the quarter where we started this 20+% correction. So did you recognize that things were changing and that it was time to maybe stop buying stocks or start buying smaller positions so you don't take as many losses? What did you learn this year? And what can you do better next year? And just some examples here. These are some things that I gathered from reviewing my performance, at least from 2018. Since the market rallied for a long time after Trump's election, which was November 2016, so the market had been running for over a year and had a powerful rally in 2017. So the market was, it wasn't very likely that 2018 would deliver those same results. So 2017 was a really good year, and it was likely that 2018 would probably not be as good, because the longer the market rallies, the more likely it's going to run out of steam and potentially start to trade sideways or have a correction. And that was something that I didn't really appreciate that much last year. And the first and second quarter was good because the market was still running. And then the third quarter, it started to have some trouble. And that was when I noticed that a lot of positions were failing, and it continued into the fourth quarter. And so 2018 wasn't a great year to hold stocks for long-term gains. If you were buying stocks in the first or second quarter and thinking you're going to hold them for months or potentially even a year or more, that didn't work out so well in a lot of cases. And instead, taking profits was a better strategy last year, locking in profits, between 15 and 25%. And as I mentioned, I know my trading results declined in Q3 and Q4, and I didn't reduce exposure as quickly and as much as I should have. I did start trading a little bit smaller, but not very much. And so I took a lot of small losses that ended up adding up and hurting the year. And ended up being that was a sign of the coming correction. So if you see you're having good performance for a couple quarters and then all of a sudden breakouts aren't working and you're taking a lot of losses in a row or a high percentage of losses, then it's time to start trading less. And it's okay to still keep some positions so you can kind of keep your finger on the pulse of the market. But I wish I would have gone back and maybe cut my position size in, maybe even in to 10% of what it was. So if you had $10,000 positions, you could have cut them down to $1,000. And then if you lose 7%, you're only losing $70. It's not going to kill you there. But anyways, I kept my exposure too high for too long and suffered too many losses because of that. So the money I made in Q1 and Q2, not that I lost all of it. It was still a profitable year, but not as profitable as it should have been. And the last thing that I learned was instead of holding or selling an entire position through an earnings report, it's better to have, in my opinion, to have a strategy of selling part of the position before earnings. So I had an all or nothing strategy before. I would either hold the entire position through the earnings report or I would sell the whole thing. And if you have a small profit cushion, it might be better to sell most of your position and hold some of it through the earnings report. Can slim type stocks do tend to go up. They do tend to gap up after earnings reports more often than they gap down. And I've studied this with a bunch of stocks and found that they tend to gap up more often than they gap down, and the gap ups tend to be higher than the gap downs. So overall, it's better to participate in the earnings reports, but if you have a smaller cushion, you may not want to hold the entire thing, and it might be better to just hold part of it. And likewise, if you have a bigger profit cushion, you can hold more of your position through there. So those are just some example lessons learned. You can look at your trading results and your trades for last year and just go through them one by one and think about, were they good trades or could they have been better? Another thing I just changed in my sell rules was I used to have, if a stock was up 10% from my purchase price, I would raise my stop to a 1% gain. The idea being I didn't want to take a loss if a stock was up 10%. And for some reason, I don't know why, but after looking back and doing some post-analysis, I found that 10% might be a little low. There were a number of cases where a stock went up about 10%, came back down. I took that 1% gain, and then it ended up rallying from there. So I raised this now to say when the stock's up twice my stop loss, then I will raise that stop to a 1% gain. So if initial stop is 6%, the stock has to go up 12% before I'll raise the stop. Okay, so these are stocks I'm currently holding that we'll take a look at here. Workday, Salesforce, Ulta Beauty, and Chipotle. Then we'll go in and we'll go through these 10 recent trades, stocks I recently traded, and then we'll conclude from there. So I'm going to switch over to MarketSmith now. And let's go through some current holdings here. Okay, so Workday, Workday caught my eye because as the market was declining here, you can see that during this period, the market declined quite a bit, and Workday mostly traded sideways, and then actually after this earnings report, traded up. So you can see that in that same time frame, the relative strength line was kind of staying sideways or starting to head up as the market was bottoming, as it turned out. So I saw this formation right here as a cup with handle formation, with this being the buy point right here. And you can see here, if you look at the volume and the handle down here, it was light. And so that was attractive. And then on this day here, we got an increase in volume. We had above average volume. Well, really a few days here. We had volume up from when it was we had the lows in the handle. And let me see when I bought this here. I don't recall exactly. Okay, so this day here is what I'm calling the breakout day, since it broke above this handle. Now volume that day was below average, but again, it was higher than when the handle was forming on these low days. So I bought the position here. It was getting a little scary here because this day it was down and it was getting close to a 6% loss, which is what I set my initial stop to. But it didn't quite reach it, and then it had this really nice gap day here. And so after that, the position has been really easy to hold. It's been holding the 10-day average nicely. And going into this earnings report, I had about a 14% profit cushion. So this was an easy decision, deciding to hold this through the earnings report. This stock has this stock is not too wild after earnings reports. It doesn't move as much as some others, so I felt the risk was pretty low there. And it actually reported after the close yesterday. And today it's trading down, but there's nothing to do yet. I did, like I mentioned, the stock was up 12%. My initial stop was 6%. So when the stock was up 12%, which was around here, I believe, maybe around here, I did raise the stop to a 1% overall gain, which is also actually coincided with basically just above the buy point and this point before it gapped up. So I think that's a nice stop. When the 50-day moving average catches up to that, which it's pretty close, then I will probably raise the stop to the 50-day moving average and just use that going forward. But this has been a pretty good trade. I'm going to keep holding it. Hopefully it reaches the 20 to 25% profit, and I will take some profits, maybe all of them there. Ulta Beauty. So Ulta Beauty had formed this cup with handle right here. There was a good bit of distribution on the left side of this base, but I liked when the handle formed here. The handle formed in very tight trade, and you can see volume was very quiet down here. And so that was attractive when I saw that. It didn't have a particular powerful breakout day here. As it moved above the buy point, there wasn't a lot of volume here. Not until this day right here, actually. But I went with this anyways. I bought it in here somewhere. And it's working out nicely. It's holding the 10-day moving average again, like Workday. And I've still got a 6% stop loss on this one. And it's moving up nicely. And its earnings report is in 2 weeks. So hopefully it'll get up to a double-digit gain, and I'll just hold the entire thing if it does that. Right now, the stock, I'm up maybe about 5%. So if it had the earnings report tomorrow, I would now, under my new sell rules, I would hold about half of the position through the earnings report. Salesforce. This stock I liked this one because it's been having the trade's been tightening up as it's formed this base. So it had this big pullback here, then it had a smaller one here, and then it had an even smaller one right here, and then even a smaller one here. So let's see, where did I buy this one? So I bought the stock this day right here as it came out of this most recent little pullback. It's kind of like a handle. It's also a volatility contraction. If you follow Mark Minervini, who's a very famous trader. So I really liked this setup. And then, we can see volume was light in this most recent pullback, and then we had a pickup in volume here on this day, this breakout day. And this stock has mostly been moving sideways. It's again, it's kind of riding the 10-day moving average. It's okay. It reports earnings next week, and right now I've got somewhere in the neighborhood of like a 3 to 5% gain on this. So I'm going to hold some of the shares through the earnings report. I'm going to lock in some of the profits beforehand, unless it has a big move on Monday, moves into like a double-digit gain. But this looks okay. And again, this stock has a pretty good history with earnings reports. It doesn't have anything on here where it's made a ridiculous move to the downside. So that looks okay to hold. And then Chipotle I just bought today. Chipotle had this long consolidation here, and it had really tight trade through here in this handle area. Volume was low. So that was really attractive, and I was watching it, but it had this 11% gap up on the earnings report, and it was just too extended. I didn't want to buy it there, but I did watch it to see if the trade settled down, and you can see how there's really tight trade in here on low volume. And then yesterday we had a update here on increased volume. So I just bought half a position of this today actually, and I was a little tricky about where to set the profit goal on this one because I don't think I want to use 20 or 25% from here. But then I don't know if I want to use the profit goal from here either. So that's something I got to figure out. Since this isn't a standard base, but it is again a volatility contraction. It's trading very tightly in low volume. That's constructive behavior there. So those are stocks that I'm currently holding. Just some examples for you to think about. Actually, let's do this way. So let's go through some recent trades. CyberArk, this was one of the better looking setups as the market was correcting here. You can see that the relative strength was rising during that time. And again, this stock had it had a pullback here, it had a smaller one, and then it had kind of some smaller ones at the end. And so let me clear that out. And I bought this stock initially right here as it had some tight trade in here on pretty low volume, and then an expansion of volume right here on that day. You can see volume expanded compared to these down days. And then I scaled in more, bought the rest of the position either this day or this day. And this one worked out nicely. It had a double-digit profit going into earnings, so I held the entire position moving into earnings, and it had a really nice gap move here, 20%. So this was a good hold through earnings, and I took my profits this day. I sold into this strength for about a 21% gain. So this was a really good position, my best one of the year. And it's still gone a little higher. There's some this is people call this post earnings drift. It's still headed higher. So I'm definitely gonna watch this one because this was a first stage base. So if this stock forms another base, I'll definitely would be a buyer for this one. Spirit Airlines. This one was a little tricky. It formed a nice cup with handle here. We had some low volume here in the handle, and then it did break out of the cup with handle here, but the earnings report was coming up, so I wasn't going to buy it right before the earnings report. But it had a nice shakeout on the earnings report, and it ended up being a really nice support day. So I went ahead and bought the stock this day, which was, I wanted to wait a few days after the earnings report for things to settle down. This ended up being a reversal day. It wasn't in heavy volume, so I didn't want to sell it immediately. But you can see this one didn't work out. It struggled around the buy points, and then it had this kind of bad reversal day here on big volume. It rallied again on decreasing volume, and then you can see it had two more down days with volume picking up here. So these were all bad signs, and I sold this one because it triggered my stop loss. So this one did not work out, and I wouldn't touch this one right now. Maybe it'll form another base, but right now it's no good. Lululemon. So Lulu formed a really nice cup with handle. It had this really long, nice prior uptrend, over 100%, and then it corrected with the market, and then it tightened up. Trade tightened up nicely in the handle here, and you can see volume was low in the handle. Then we had this day here, this breakout day on big volume. That was when I bought it, and then the stock's just kind of been since then hovering around the buy point. Volume's been low, and you can see it's got tight trade here and low volume, which is constructive. But I ended up selling this because I wanted to buy something else, another stock, but I had a full portfolio. I was fully vested, and I had to sell something, and this was the laggard in all the stocks I was holding. So that was the reason I sold this. Plus, the breakout did fail here. We had the breakout, and then this day was these days were on lesser volume than the breakout day, but this is higher volume than we've had lately on this down day, and it was gap down too. So so I sold it there so I could buy something else. But I'm still watching this. I would definitely consider this again. It's not totally broken. It's just maybe taking a break. Trade desk. So I bought this stock on the sloping trend line on this one of these 2 days here, and then finished my position. I believe this day as it kept moving higher. And this stock it was kind of a double bottom if you look at the shape here. Although pattern recognition is not calling it that. But bought this in here, and then it was looking good going into the earnings report. On this day, it was at a double-digit gain for me. It was at about a 10% gain, and I thought I'm going to hold it through the earnings report for sure. Then it had this day, it was down 7%, and on big volume, some of the biggest volume in a while. And at that point, I didn't have much of a profit cushion anymore, maybe only a couple percent. So I sold all the whole position, and you can see what happened. The thing gaps up 31%, which it has a history of doing this, of these big gap moves on earnings reports. I really hate stocks that do this. It doesn't really do anything in between earnings reports, but it has these huge moves up. And this is part of the reason I just changed one of my sell rules to say if I have a 0 to 5%, or if I have a 1 to 5% profit cushion going into earnings, I'll hold a quarter of the position or a third of the position, so that in this case I could have held something and participated in this move, and I still would have that would have helped me get a much bigger profit on this stock. Now it's kind of hovering around the 200 mark. If volume keeps calming down and it trades tightly and then moves above that, I may buy this one again. Biotelemetry. This one also had a nice uptrend here. It had formed a nice cup with handle here. Volume was pretty light in the handle. It was pretty tight trade, and this was the breakout day. You can see volume picked up on that day. And then this stock started to have some trouble. It had this reversal day here. As it moved up here, it had another reversal day, another reversal day. So this one, I sold this before earnings because it was I was up double digits on this day here, and it ended up coming back to about a 1% gain. And I thought, well, if it's only a 1% gain, I'm probably don't want to hold anything through the earnings report. So it hit my stop, and earnings report was coming up, so I just took the 1% gain on this. Kind of disappointing, but you could see I ended up being glad I sold it because I would have got whacked and definitely taken a bigger loss. But now it's moving back up, and it's actually buyable right now. But I don't want to buy some so soon after this big move down, so I'm not touching this one personally. Horizon Pharmaceuticals. This one, like Trade Desk, was a disappointing one. It formed a nice cup with handle here, and it had you can see it had a nice move up here. It had a nice breakout day. Then it was trading tightly in low volume, and I was really liking the stock. I thought it was going to keep going higher, and then all of a sudden it started failing. The breakout failed, and we had some heavy volume distribution days here. So I ended up selling the stock in here because it hit my stop loss, or it was close to it, and the earnings report was coming up, and I was at a loss. And you can see what ended up happening on this one. This one had a huge move, bigger than Trade Desk. And in this case, I think there's nothing I could have done here. I wasn't going to hold at a 5 to 10% loss going into the earnings reports and potentially take an even bigger loss. This is just the way it goes sometimes. Frustrating, but nothing to do about that. Tandem. This stock I love because it had, you can see here, it had this massive move up, and this is really the first base it's ever formed. It's a cup with handle base. It's the first base it's ever formed, and it had you can see it had a nice breakout day here, heavy volume on the breakout day. It had light volume in the handle down here. I thought this was an awesome setup. Then it moved up and started, forming another little handle here. And this one, I had this and was up double digits on this. And then, again, this is another reason I decided now I'm going to hold part of the position if I have a small profit. Because I had maybe a 2 or 3% profit going into this earnings report, but I sold the whole position, which really hurt me because you can see this had a big move up, 25%. So I based on my new sell rule, I would have held some of the position, like a third of the position going into the earnings report, and then been able to participate in this, and then I would have sold into this strength. And this one you can see is still moving higher. This is a good one to keep an eye on because if it forms another base, it'll only be a second stage base. This thing could have still a long way to go. The fundamentals aren't particularly great. Like it's still actually not. It's still not profitable if you look at earnings. The earnings are improving, but they're still not at a profit yet, and they're not even forecasted to be profitable for another couple of years. So this is a good one to keep an eye on. MedPace Holdings. This stock had another one that kind of had progressively smaller pullbacks. If you look here, and then it had this nice tight trade through here on light volume, and I bought it this day when it broke above that on an increase in volume. So this is another volatility contraction pattern. Mark Minervini is the guy that coined that. Now this one was tough to manage because it moved up and then it came down and It actually hit my stop loss this day because I was up double digits, and it came back down to a 1% gain, but it was only briefly, and I didn't see it. I couldn't act on it right away. I was at work, which was actually good because it ended up having support that day. And then you can see it rallied to new highs, and it was it was hanging out here at new highs with the earnings report coming up. And this move here, I was up over 10%. And so I felt totally comfortable holding this through earnings, and it had never had a big gap down. Well, never until now. And I actually saw this. They reported earnings after the close this day, I believe. And I saw that it was down about 10% at that time. It was around here. So I sold it actually after hours for about break even. And that was lucky, actually. It was a good move as it turned out because you can see it ended up gapping down way more than that. I would have actually taken probably like a 10% loss on the stock instead of breaking even. So again, you never know with earnings. Having a 10% gain going into an earnings report, I would never expect to take a 10% loss, but it could have happened here. Vericel, this was another interesting one I sold after hours. This one had, again, a nice cup with handle, very light volume here in the handle. You can see like these 3 days here, very light volume. And then we had volume pick up as it moved up here. And this stock was at a decent gain after earnings or going into earnings. I don't know if it was double digits, but it had a nice gain. I held it through the earnings report, and again, they reported, I believe, maybe before the market opened this day, and I actually saw it was up 15% before or an after hours trade, pre-market trade. So I sold this actually up here around 22.50, and as it turned out, that was an excellent move because you can see it didn't trade anywhere near that when it opened this day. And it had a really wild day. If I didn't sell it here, I probably would have ended up selling down here because it would have triggered my stop loss. Actually, probably somewhere around here. So this one again just turned out. I saw that after the earnings report, it was up a lot pre-market. I didn't want to miss the opportunity to take my profits, and I did. And then it ended up not trading anywhere near there during the regular session. So just kind of lucked out on that one. And then the last one is Shen. And this one, again, this one had a nice uptrend here. A relatively shallow cup. You can see 20%, which is actually less than the market correction was. So this had a pretty shallow correction here, which is why the relative strength was, mostly up in this time. And then it formed this long handle, and I had bought this one, and then you can see it moved up. It kind of struggled to move up, and then it started to fail. And so I sold it because the breakout had failed here. We had a distribution day, kind of 3 in a row there. So I sold one of those days because it was getting close to my stop loss, or maybe it even triggered it. So that one didn't work out so well. And again, earnings report was coming up, and you can see the stock yesterday traded down again after earnings, and now it's kind of struggling to break above the 50-day. So I would avoid this one for right now, but I still got an alert, see if it breaks out again. Okay, so that concludes this video. I'm going to try to keep posting these quarterly. Like I said, I didn't post one for quite a while there because I was busy with looking at rental properties and actually buying our first one. So that should be, I think the effort there is going to be, the time commitment's going to be going less, so I can hopefully get these videos out once a quarter. But if you found this video on YouTube and you're not a member of the Meetup group, then you can join by following the below link. You do need a free Meetup account. And the reason you should join is because only members are invited to the webinars that we periodically have. and only members are notified when these new videos are posted. There were no questions from the past month for members, but if you have any questions, please send them over and I'll include them in the next presentation. And thanks for your time.